this is Vijay Bambani and I'm back with you again, recording videos still from my residence because of the lockdown. I hope you're staying indoors, staying safe, but still watching the markets and keeping your finger on the pulse of the market. Now this video is more of an educational video than anything else. Rather than give you a fish, I want to teach you how to catch a fish so you can feed yourself for a lifetime. After this video, you'll basically be able to discern for yourself the most important every trader has to grapple with. What should I trade today? You see, the markets have a language that they speak every day. And the markets talk. Believe me, they talk to traders and tell them you should be buying this and you should be selling this. The only thing is, number one, the language is numerical. They talk in numbers. Number two, we as traders do not listen. If you were to understand the message of the markets, your life as a trader becomes a whole lot more easier and a whole lot more profitable. So, on my social media pages, as well as Equity Masters Telegram channel, which I would strongly suggest you join, the official handle is Equity Master Official. I put up a couple of posts every day, Monday to Friday, late evening, which I would want you to read. I've already explained to you in another video as to what MWPL or market-wide position limits mean. I've also taught you about what volumes mean to a trader in another video. This video is about the third post that I put up there, which probably comes at the fag end of a series of posts every day. These are the top 20 counters that are segregated in descending order based on various criteria. Why are they important? What message are they sending to you? And most importantly, how can you make money out of them? You see, the first column is the top 20 counters with the highest statistical beta in descending order. In layman's language, in simple language, these are the counters that are the most volatile in descending order. First of all, the concept of volatility. Volatility means that the counter may close with little or no change on a day-on-day basis. But on an intraday basis, if it is going up and down like a seesaw, it's volatile. To an investor, volatility may mean nothing. It could actually mean a pain in the neck. But to a trader, volatility is lunch on the table for the family. A trader makes money by buying and selling on an intraday basis. Micro trend traders like me would buy in batches of 1 hour each and square up the trade. So I want volatility as a short-term trader. So the first column are those counters which are the most volatile. The second column are those counters which are the top gainers over a 10-day period in descending order in percentage terms. The third column are the top 20 losers over a 10-day period. Obviously, if a stock is figuring in the top 10, it will not figure in the top 20 losers. You can't have a stock which is appearing in gainers and losers, which is common sense. A stock that can be volatile can appear in either gainer or loser. The fourth column is those stocks which are the highest volume gainers, which means traders who are buying and selling that stock a lot. Now you have to understand there is a difference between volumes and open interest. Volumes may be created by day traders like me who would get in and get out and not carry their trade over to the next day. To that extent, volumes need not mean overnighters, trades that get rolled over from day 1 to day 2. That takes us to column number 5. Column number 5 are those counters which have seen the highest build-up of open interest. What is open interest? It is those trades that have been initiated or entered into but not yet closed or squared up in market parlance. Open interest is basically an important measure or a benchmark because people who create open interest are strong hands. People with strong convictions will say, hey, I'm going to write a check to my broker, I'm going to buy this counter and I'm not selling it till I get my price. So these are people who are digging their heels into the ground, pitching their tents and saying, I'm not going anywhere till I get my price. These guys move the needles and gauges in the markets. Is it possible that a highly volatile counter which appears in column 1 can also appear in column 2 or 3, which is gainer and loser, not both, but 2 or 3, and appear in column 4, which is highest volume, and in column 5, which is highest open interest? Yes. That takes us to column number 6, which is stocks with the highest amount of market-wide position limits in descending order. Please refer to the video What is MWPL to understand what it actually means. These are stocks which have limits, and based on how much the SEBI or Securities and Exchange Board allows you, based on that we try to gauge how much the market has actually utilized those limits. The higher the limit utilization, the higher the trader interest. All right. Now, what I'm basically looking out for are stocks that appear in, like I said, you cannot appear in the highest gainer and the highest loser list. So that is an either or. But what about those stocks that can appear up to a maximum of 5 columns? Those are the guys I'm looking out for. This is what the market is telling me in statistical terms as to the best counters to trade. By the way, the first counter, the statistical beta that I told you about, this is a purist's delight. Purist derives from the word pure. I do not believe in taking the VIX or the volatility index because the VIX is a synthetic and a lagging indicator. I depend on statistical beta, which takes the pure price mobility on an intraday basis, and it takes nothing else. The price is the price, and the price is the king. So these counters in column number 1 are a purist, statistically sorted number of stocks and indices, and if at all counters are appearing in all 5 columns, those should be your first priority. Your second priority should be those counters that appear in 4 or 3 or 2 columns. There you are. I've shared with you my secret sauce. I hope it enables you to be a far better and far more profitable trader than you are right now. More educational videos coming from me, I assure you. Before I sign off from this video, may I remind you to click like on this video if you're watching this on YouTube. In the comment section, do let me know what you think of this video and what you want me to record for you next. Do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investing and trading. Do take very good care of yourself, your trades and investments. Vijay Bambani signing off. For now, till we meet again in my next video, thank you for watching.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.